You mentioned it a little bit earlier and kind of like passing, but everybody talks about like, oh yeah, I want to buy bigger deals. I want to buy, portfolios maybe. But you mentioned that you bought a smaller deal that was just such a good deal you couldn't pass it up. Are you seeing that these smaller deals are more liquid versus the bigger deals?
That's a great question. I would say when what I've seen in the underwriting, when the deals are going north of 5 million, 5 to 8, um, they usually, for some reason, they don't cash flow when we buy them, have expectations on a price that is much higher for some reason. I don't know why. It's because maybe it's operators that aren't the moms and the pops anymore, and they aren't as interested in seller financing. What I've noticed, if you are, with that said, like if you are, like I said, 5 million and above, there is a pocket there, 5 to 8 million, and there are exceptions to this. But I'm just saying that below 5 million, you will see a lot more creativity and the moms and the pops and the boomers and all of those things I already mentioned. No, I haven't. That's the only pattern I have seen. And when you get over the 12, 15 million, they're operating like a proper business. And now you're buying them at just a cap multiple, basically, or cap rate multiple. And they usually know what they have. With that said, we do stumble on some really mismanaged where leaders fell out of love. They don't love what they do anymore. They have competing things, other businesses. We find those as well, but we don't have any of those under contract. The existing deal, why it's phenomenal, is just because there is no bank debt. It's all seller finance. It's very low single digit interest only for a long time frame without going into specifics. And if you have such a deal and those terms, you will always make it work in the long run. The risk to entry is so low. There's still risk, but it's so low compared to if you have to spend 12 to 18 months building something and then you cash flow.
No, yeah, that makes a lot of sense. Jesse asked that question. I know he did because one of the owners of our firm is he's an awesome commercial real estate investor and a beast in the space. And he told us that, there's nothing wrong with deals that are like under $1 million, the smaller deals, because there's so many more buyers for them. They're so much more liquid. So like if you get a $5 million deal, and let's say for heaven forbid you get into trouble or something, you need to sell it, it's not nearly as liquid. There's not as many buyers out there. But if you get a $500,000 deal and you need to sell it, there's a bazillion buyers out there because that's a smaller price point. So I think that's probably where that question came from. I think that's a great point.
That's exactly right. Yeah.
Thank you for clarifying that one. I didn't see that. Now I will add that to my pitch whenever I do smaller deals going forward.
Yeah, I think it's great. And two, also, I've seen them do it time and time again, and I've seen other people do it. You can create a lot of value on a little deal. Like you can take a $500,000 deal and make $500,000 of value on that deal. So it's like you don't need $1 million deal to make a big value add play. It can be a smaller deal and it can be tremendous value they add, like hundreds of thousands of dollars. So I think that's definitely something.